Let's take one more look at an example here. So Bitcoin had a high. I'm not going to draw all this stuff in because it's already played out. So we had a high, we had a low, and we had internal structure. Because technically speaking, SFPing this low here, I'll just draw it like this, and we'll draw the X over. Technically speaking, if this is what you've seen, then it would not be considered a weak high right here. And the reason for that is because it doesn't necessarily relate to local structure. And the reason why it doesn't relate to local structure is because this high was not confirmed. Okay, it's not yet confirmed. And the reason why this does not relate to current market structure is because price came up, price came down. Price came to here, and then it wicked to here. So what does that say? It tells you that you just picked a lower high, right? So where's the weak level at? Is it here? Is it this guy? Is it this guy? Or is it this guy? Or is it this guy down here? Right? You got to ask yourself, which one is it? Because you need to identify which one it is, especially when you're in these trickier range-bound environments. So in this case here, it would be this guy. The same way that I drew my path tool out. And that's very, very key. You have to do this with your path tool so you don't mess up and pick the wrong high or low. Even myself, I could estimate which one it is without drawing it in. But then, being a human and all, it's very easy to make a mistake. So it's not worth making that mistake when it only takes a moment to draw this in, plus it's good practice. So in this case here, because the job of this high failed to create this low in question, then yes, this became a targeted level. Okay, now let's see where the structure transition and how you would have gotten in a trade like this, because what I see now is a very, very bearish move down here, very fast, okay? When you have a very, very fast move down coming into the SFP or the X's, you have a problem. It generally doesn't leave behind much structure. So you're going to have that same problem that we talked about a few minutes ago, where you had to wait for this guy to break in order to come up to this guy and confirm him as a targeted level, which is kind of silly, right? Because it's very, very close to this guy. So what do? Right? Well, this is where you have to get a little bit creative, right? And you have to go down to lower time frames, perhaps. You may have to use internal structure. Is this a high confluence zone? You have to ask yourself that first. If it is, and volume's agreeing with the move, then maybe you get involved so much here. And if it breaks and then retests before taking the high, maybe you get in more here. That's your call at the end of the day, right? What do you think is best given the current circumstances? So what I see here is basically nothing. I can't see anything because we're stuck on one time frame. We have to be willing to go down and investigate these expansion legs. So let's draw our structure out. We went down, we went up, and then price came down again. Let's investigate this last leg. We don't care about this leg. It doesn't relate to anything, nor does this, because it already played out. We already made our lower high. So what do? Let's drop down to the 1 hour. I'm actually going to draw this out with my path tool from top to bottom, just like so, and I'll use red. All right. This is the level that we have to take before we can confirm that high. So obviously on the 1 hour, that's not going to happen because your structure is basically the same thing. So if you drew a structure from this high, I guess you could say this, and this, but really it's so close to this high that what's the point? There's really no point. So 45, 30. I'm going to go down as far as I can to see if there's anything here. 15. Oh, we're getting closer. 10. There we go. Right? So we have a 10-minute structure high on this expansion leg. So let's draw our structure in on the high. We're going to wipe this. We're going to work our way down. So price came down, price came up, price broke down officially here with a close, and price came up again. Price broke down again, and price is starting to close above. There you go. You have a close above. Not that significant, no, but it's still a close nonetheless. So we have a bullish break in structure. Now, because this is the way we pulled our structure, we have to keep in mind that technically speaking, you have to cover this low on your stop loss for a trade like this. Technically, you do. And the reason for that is because, look at the pull. If this is your low and this is your higher high where the transition occurred, then price can come all the way down to here if it likes to, even if it invalidates the current uptrend pull, like this pull right here, the up the down, the up, the down, it can invalidate that if it wants to maintain this red pull, okay? And go like that. Most people don't realize that when they're looking at market structure. Very, very key that you understand this. There are different ways of pulling it. There's a reason to pull from the bottom up, and there's a reason to pull from the top down in this case here. I would say that it's still worth noting this pull that we just discussed, because more than likely, you would like it to maintain this black pull here because it would make for a nicer, cleaner play. So perhaps price comes down like this and goes up like that. But maybe this is where you start to scale into the trade. So let's see what happens here. Let's go to the 45-minute chart. Now, obviously, when you have a situation where this is still a notable level, then I would suggest taking profit on that notable level, or even directly before it if you see signs of resistance. And if we do close above this high, chances are, yes, we will hit this high. But does it have to do so right away? No, it doesn't, because look at what we have again from an internal standpoint. You went down, you went up, and price went down again. Oh my gosh, there's another market structure pull. So what does that mean? That means that price can come up to here, produce its candle body close, come all the way down towards the low again, and then come up towards the high. How does that work? Well, that sucks, right? It is what it is. We have to deal with that. This is a part of market structure. So what you can do in a situation like that, if you enter a trade like I just did here, is you can let it stop you out and continue on with this red or black pull, which they'll eventually meet up together. And from there, you can tell yourself, well, when that pull breaks out, or breaks down rather, I will find a new trade, right? I'll just enter again based on the black pull here, a bigger pull, this one. Right, so if we get this, maybe this is where we come back to, say, an order block, and then we look for another trade up towards the high. So in this case here, we'll see how this played out. So price absolutely did not want to retrace in this instance. We just came straight up. So in this point, obviously, we're close enough towards that high that I could just say, you know what, that's fine. I made enough money off this trade. I'm happy with that. So in this case here, look what happened. The red and the black pull became one pull. You'll see this quite often, where these points meet up. And this is where they both met up. They both had the more than 2 black candles in a row right here, and then touched the high again, breaking structure once again, bullishly. It's very, very common to see these market structure points meet at some point in time. That's actually much, much better when they do, because it makes for an easier observation. Being able to identify things in a live environment is so much easier when you have this kind of situation. So price came up very aggressively. Is it going to take the high, aka the weak high? Is it going to take this high, even though it's not technically weak? I would say more than likely, because it's so close to this high, right? But it's not that it's a weak high, because it's certainly not. Let's see what happens. There you go. So we took that high. So I hope that makes sense. We will be using a lot more of this as the days progress and the videos progress, but this is a very, very solid technique. And using this technique, you would have been able to call basically every move on Bitcoin, for instance, on the weekly time frame. So if I was on the weekly time frame and I only had access to this one technique, then I could have said to myself, well, you know what? This is Bitcoin's weekly chart. So using market structure on the weekly, you could call almost the entire bull run right there, right? So price went up from this low to this high. You had 2 black candles in a row. Okay, cool. And because that's more of a range and it's not clear as day structure, then you know what? That's only 1 black candle. Even though that's 2 right there, I'm not going to draw up, down, up, down, up. I would just draw it up. Keep it simple. It already played out. Price came down again. Now, on Binance, we actually wicked this low ever so slightly. So what does that mean? Well, that tells me that this is now a weak high if you get a structure change. But wait now, even if I drew a weekly structure out, I'd have down, I'd have up, and I'd have down again. I have to wait for this guy to break to touch this guy? That's kind of crazy, right? Well, not really, because if you went down to a lower time frame, you could use that as well, as I mentioned in the previous example. Daily time frame. So what do we have on the daily time frame? I'll draw this in a lighter pull here so it's not in our way. There's your weekly pull. Here's the daily pull. Price went down, price went up. Price went down, up, and down. according to Binance, we didn't touch that low again. It missed it ever so slightly, but we all know that every other exchange went a little bit lower here on the SFP. Binance, I think, was the only one that didn't SFP here. So I'm going to go with any other exchange. So in this case here, we went a little bit lower, therefore producing a weak targeted high. Price ultimately produced a Wyckoff model and came up towards that high because that was the order flow objective of the move. Price wicked the high and then it came up even more aggressively after. Right, so we came up very aggressively to follow, but this would have been your first indication that, hey, wait a minute now. Technically, that just confirmed the $65,000 high on Bitcoin as a weak targeted level. So price is ultimately going to come back to it unless you get a bearish transition in structure that would stop you dead in your tracks. And ultimately, I can delete that daily pull because we all know what happened. Well, let's cancel the replay and find out. Price came up towards that all-time high and took the all-time high, the first one. But notice how it took it with the wick. So what do you need to see? You can't call this a break of structure because it's not. You would have to take the wick over and look at that. Once again, you have yourself another wick. So if this is your structure pull, up, down, up, down, up, you went from a weak high because this high failed to close below this low here. You had the SFP effect. Therefore, you came back towards that high. And now this low failed to close above this high, therefore producing a weak targeted low. Price came back towards that low. Ultimately, it SFP'd the low once again. But did you have a structure change? Let's see. Was there justification for a long trade here? So if this is where we SFP'd that low once again, let's draw our market structure out. We don't need to go from all the way back up here. We can go from right here. Price went down, price went up, price went down again. So even though you're seeing something that looks like an uptrend here, that's only internal structure. The primary structure breaks past this point here. So anything between here and between here is technically internal. It's contained within the 4-hour high and the 4-hour low. So in this case, what happened? Let's see. Price went lower. Did this work? Not at all. Right? This did not work at all. So as you can see, being able to identify market structure is absolutely key. It will help you get into many trades. You will be able to predict long-term outlooks on whatever asset that you're currently watching. But not only will you be able to do this, you'll be able to refine your trades in a way that you've never been able to before. You'll be able to use this for confirmations on getting into trades, and you'll know when your trade idea is invalidated in a live environment, because if structure flips against you, then why are you still in that trade is the question you got to ask yourself. So actually, let's look at one more thing before we wrap this up. One more example on this low here is look at this. We came down, we came up. Price came down again, and then it officially broke up with a close. All right, so there you go. Another example of a transition in market structure. So what does that tell me for Bitcoin? Well, in theory, this is a protected low because it had a very bullish break across from left to right.